How are you? Enzo DiCostanzo, clinical professor of economics and finance, St. Peter's University, April 7th, 2019. Today we're going to be working on 2 of the merchandising operations problems. For my live section, this is your assignment, and for the online section too, this will eventually be your assignment, but I'm working on them now so that people can sort of read ahead a little bit. With the online people, you're more on your own. Now, I have to clarify to people, set A is the assignment. These problems are in set B. So these problems will help you figure out how to work out set A. So they're not exact. So don't hand in set B, because that's not the ones that I'm looking to grade you on. I want to move towards working these out, a similar problem, and then you figure out how to do the assignment. We're not just doing it exactly. I think that's a better thing for you guys to do as we're working on this. Okay. So, all right, folks. Let's get the Excel up, and we'll get going on this. Okay, here we are. Problem set B. It's the accounting for the merchandising operations chapter. And like I said, 1 and A are the ones that are assigned. So if you look at this, so this is for 252, but the online section will have a similar document generated, and 51A. This is what's due, but we're going to work on similar ones. Okay, so don't just hand in set B. I want that to. I don't want to just do them. I want to get away from doing that. I don't think it's very good to work like that. So you have to read and apply. You have to learn how to apply what's going on. So anyhow, like I said, we'll have lectures on this chapter, and the cash chapter. We'll have over the next week or two, 10 days, all that stuff will be out on YouTube. Like I said, I just wanted to get this out first because the live sections, it's due this week. So you gotta get going. So Jeremy's Book Warehouse distributes hardcover to retail stores and extends credit terms. Okay, so this is a bricks and mortar distributor or supplier of books to the storefront, to the retailer. 2% discount within 10 days, net due within 30 to all of its customers. Those are the terms, the credit terms. May, we're talking about May. And the supplier has an inventory consisting of books purchased for $1,800, and during the following merchandising transactions occurred during June. So yeah, right, yeah, the of books purchased, correct. All right, so yeah, so they've got inventory of books 1,800, and then all the June trends, and you can see it's substantial. So you're looking to journalize the transactions for June and use a perpetual inventory system. So yeah, okay. And we have all the accounts down here that we're going to be using, chart of accounts, cash, receivables. And as you read deeper into the accounting book, each one of these, there's a whole chapter printed on all of this. Okay, so just keep that in mind, as we go through this. Okay, so let's get to the Excel, and we'll figure out what's going on here. Yeah, these are the templates. I've created these templates for you guys, has all the transactions sort of listed here. Perpetual system. Well, I just want to refresh my own memory. And to that 1,800 and where that came from. Yeah, 5.1. Okay, we're 5.1, so we're good here. Where that 1,800 went. Receivables. Yeah, you would need that for a ledger. Is really what you would need, because just looking through all of these, yeah, here's the 16 and here's the 25, and yeah, like I said, again, I've organized it in a way where hopefully it makes a lot of sense for you guys. But yeah, at the end of May, the inventory consisted of books purchased for 1,800. Okay, yeah. And again, we always want to make what we're sort of our answer sheet here a bit smaller, and we'll get everything sort of moved. We'll get everything moved around as we need to. This is what? Yeah, this is the online section. We'll get this to you guys at some point. I'll sort of copy and paste it into this little tab, at the end of today, and we'll worry about that. But I want to get it to the live section sort of first, because like I said, those guys, it's due. Yeah, theirs are due now, or due in a couple days. With the online section, you have a little bit of time still to work on this. So we're working here. I'm just looking at my interest here, just as we're going through this. So yeah, there's chart of accounts, cash, receivables, inventory, payables, all the pieces to the puzzle. And we highlight what we use. This is just the chart of accounts. Okay, so we have all those. All right, so this is the warehouse distributor hardcover books to retail stores and extends credit terms of 2% in 10 days. Net 30 to all of its customers. Okay, which means it's due. Okay, then 30 days. Inventory. Now, again, you don't necessarily need that in the journals. The journals are the specific events. When you get to a ledger, you have a beginning balance and your balance sheet, what your balance sheet looks like, those kinds of things. So June 1st is the first one we're going to look at here, and it says purchase books on account from. Now, this is the warehouse, so you want to understand the perspective of all of your transactions. This is the warehouse folks buying it from their source for $1,600. They had a cash payment, and again, I try to put all the expenses in here as we went along. Okay, and it says the appropriate party also made cash payment of $50 for the freight on the state and its FOB destination. So the legal custody changes hands upon the destination. So the seller paid the bill for the transportation. Okay, so you're not going to have, so when you look at the journal entry, you're not going to have the 50 in there because the seller paid for it, and this is the warehouser, the warehouse guy. This is his books, his journal. Okay, so if you were the seller, obviously you're going to recognize that $50 expense, and then your $1,600 also that goes out the door type of a thing. Okay, or actually the $1,600 comes in, and then whatever your cost of goods sold is, theoretically going to be less than, maybe half, could be $800. And then you paid $50 so certainly not bad. Don't feel bad for the people selling the stuff. That's for sure, the sources. Okay, so it's $1,600 purchase on account from Davies Publishers, FOB destination, which means the Jeremy Books didn't pay transportation costs. It was the seller that Jeremy Books bought it from. They paid the $50. And even though the number's in there and you know what it is, don't just feel that you have to use it just because it's sitting there, type of thing. So this is just this one, 16. Now, and again, who are we talking about? These are the people who bought it. This is the warehouse. Okay, so it's there. It goes into for their selling price or their sales price. They bought it for. Now they may flip it to the public for whatever is a total of $2,400 or $2,000 or something along those lines, and it's a liability to them because they owe their source. Okay, so this is the first June. Now again, this is all worked out for you guys, and this is very, very ready to go. We're making our own software for you folks to work these problems out. Okay, so that's really what that is. So there's inventory, payables, purchase inventory and account from Davies Publisher, all that type of thing. It's all sitting there for you. Okay, that was the first one. Next string, again, it's based on dates. Jeremy sold books on account to a reading room or reading rainbow for $2,500. The cost was $14. So this type of transaction existed for Davies because they bought this from Davies and Davies sold it for 25, $1,000 more than it cost them. So theirs could be $600, $800. Their cost of goods sold. But that's Davies books, not Jeremy's books. Jeremy bought it from Davies, but here Jeremy sold to Reading Rainbow. So that's why you have both. That's why you're going to have the write down of inventory and the cost of goods sold situation, which again, and receivables also going to. So it's both of these on the 3rd of June. Okay. So you're here with this. This was a $2,500 sale, and it's on account. It wasn't a credit sale. It's a buyer reading room. And again, I put in the notes here. Buyer and whoever, you got to be detailed. You got to be detailed. And the cost of goods sold for these numbers. Okay, cost of goods sold 1,440, and now whose inventory is being, again, this is the sort of, I don't say the middleman, but the books come, this is what's considered the supplier to the retailer, but the supplier has a source also, and the supply chain starts someplace. Okay, and they're not the writers of these books or anything like that, but they're picking them up and doing the work to make the connections to find where all the stuff is coming from, all this material, the sellable material, the content is coming from. This is the cost of merchandise sold on the invoice and to the buyer, and this is to record the credit sale to the buyer. And again, notice who we sold it for, or who we sold it to rather. Okay, you have all that stuff in there as you go. Okay, very important, very important. The sixth, 100 credit. Now you're linking to a transaction that was made already. So here's your 1,600 here, but you're going to reverse it technically by 100 because you returned some material that you bought from Davies Publishers. So you're going to slide down to here on the 6th, 100, 100. All right, that's all that is. And save your work as you go type thing. Okay. And I'll post this template on the Blackboard site for the day section, and I'll copy and paste it for the online folks too. Next thing, payables. Yeah, and you want to figure out what's going on here. On the 9th, you paid Davies Publishers in full less the discount. Well, you bought them on the 1st, and your terms were 10 days away. So, 9 minus 1, 8, however, or if you want to count the full day, 9, 9 days, you're 9 days away on something like this. Okay, so you have this sitting here. And again, all little notes, what we're doing, what's going on. You need detail. Teaching you detail is what we're teaching in here. Yeah, so here the payable is the following because you made a return, so it's 1,600 minus 100, right? You took that, and this I always want to sort of that's 10, and you can make that italics if you want. This is the cash number we'll figure out in a second, but this is 2% of your net, not 2% of the initial purchase or the initial inventory transaction. That's why because you returned 100, so 1,600 minus 100 is 1,500 times 2%, which is 30. And then the cash is just the difference. Because you have a $30 discount, right? I have no idea. Whoops, it's the wrong part there. Sorry. Yeah, right there. Sorry. Wondering why that was blue. There we go. There's your cash number. So you're paying $1,470, and you're recognizing a discount. Okay, and you keep your discount based on what you pay for it in terms of dollars. I'm sure you keep it in terms of units too, but in terms of dollars. So if you get a discount, you're writing your inventory down a bit. Well, the seller, or the supplier to Jeremy, from Davies Publishers, right? Davies Publishers. But this is Jeremy's books. This is the supplier from their publisher. He'll recognize a similar transaction where he receives the cash and there's a discount, or there's a sales discount. He recognizes that, and how his inventory is impacted, and all that stuff. Or their payable, how their payable is impacted, and they recognize a similar, but just all reversed, but a similar transaction. The 15th, and now again they receive payment in full. These guys sold to Reading Rainbow on the 15th. Right here's the 15th, or the 3rd. Which is right here, right? They sold to Reading Rainbow. They had their cost of goods sold was recognized, that kind of thing. So they got paid on the 15th, which is 12 days, away. So it falls outside of the 10 day number because this happens on the 3rd, and this is that's 12 days away. Okay, so this is on the 15th, and that's just 25. Okay, so I guess with here I just said equals 25, 25, like that. Yeah. Right, we received cash and we wrote down our receivable. Because up here we had a receivable here that was 25. We wrote that, so now that's been converted to cash, is what happens here. Receipt of cash from Reading Rainbow is that, okay? The 17th sold books to Lapidus for 18. Again, this is similar. Like I said, I warned the live folks in class that this was going to be, you know, a lot of entries. So you're going to go to journals, that's for sure. 1,800. And you got to be careful. You sold them to 1,800, but your costs were 1,080. Those numbers are very similar. So be careful. You don't cross your numbers. There's 1,800. 1080, which is right there. Okay. So again, you made a sale, a credit sale. You have a receivable. You have cost of goods sold, which is usually going to be less than what you sold it for, and you recognize that. But you can see, folks, we're going to go and go and go with these entries. Okay. On the 20th, it says we purchased on account from Fahey Publishers. Again, destination. It's the same, and again, it's just the seller. So we're not, we're not seeing a delivery expense or freight in. We're not seeing anything because the legal custody changes hands at the destination. So it's still the seller's while he transports it. He paid for UPS or the post office or FedEx or DHL to send it to us. That type of a thing. Okay. So that's what we have. That's what we have happening here. 2%, 15 days. Just keep that in mind that those can change a bit. Those terms can change, depending on your, the relationship with the publisher, and do you want to have a good relationship, or do they need you? Do you need them? It comes down to that a lot of the time. Who needs who the most gets the better deal on these kinds of things. So, yeah, for the 20th, it's just simply the 1,500, and then you have a payable that you owe them. Yeah, I'm highlighting Alt HHN. I'm highlighting the gray and just getting rid of the gray, the fill as we went along. And then receipt of cash. Okay, so, right. So looking at this was inventory, that kind of a thing. It's from the publishers. Now, we've got to switch gears again for on the 24th. It says you received payment in full from Lapidus. That's your transaction from the 17th. So the 1724 is that situation, and that's going to be 7 days. Okay, so let's, so we're gonna work. There's gonna be a discount, right? All that. So let's get the 24th, which is here. Where's that on the 24th? Okay. Yeah, there's nobody returned anything. So on the 17th, it's 1,800. Yeah. Here's your receivables right there. There's your 1,800, which is there. So, yeah. So what's owed to you is now converted to cash. That kind of a thing. And you have equals 2% times 1,800 is a discount. Whoops. Is that here? 24. Yeah, that's your 36, which is right there. And this is the difference. Oh, and by the way, I've been doing these checks here just to make sure. I don't think I did it up top. I should have. Within the discount here, which this is just a check. I forgot to sum this. See that? I just sum those two. That's it. 15. Making sure what we're doing here. Little checks. And you could read the note by just by clicking on it, looking at the formula line within the discount period. I think you guys, at this point, I think you guys know that. But yeah, this should have been, we should have, this all, and I can do it right now. This whole thing should have just been brought down by 1. Yeah. Well, on the 9th, I want to move. Yep, this one. There it is. See what we did? Bringing down bringing down the formatting. Actually, I'm going to do it on mine too. Oops. Do it on mine also. Yeah, because you don't want to obstruct your notes too much. There you go, so you can see what's happening here. There it is, like that. Okay. If there's any missing borders that show up eventually, you can always fix those. Oh, it's nice to have my original copy in class. I'll find little things to change and forget later and that kind of thing. So I don't like that. That's it. Give yourself a little bit of space. You're not obscuring your notes. I mean, why not? You have all the real estate you need. You own the real estate in Excel, so you can have as much as you need. So yeah, we have a few more to go, and we'll have the journal done for this. But it walks you through sort of this what's happening in a Walmart or a Best Buy or a Target and Home Depot, a ShopRite, all those kinds of places. Okay, and this is what the accounting looks like in those kinds of jobs. So there's plenty of people working at those kinds of places that come to St. Peter. So it gives you some insight into where you're working. And as I tell so many people, you want to move up in those companies, and a lot of those places, they're interested in their associates moving up into I don't say a better job, a more job that uses the college degree that you're working now, as opposed to, I don't want to say just selling, but as opposed to stocking shelves or being a cashier or something like that, or just being customer service. You want to move up into accounting or move into some kind of management situation, and there's a lot to manage. I mean, Walmart's a country, folks. It's a country, so it needs a lot of stuff going on. A lot of management is needed there. There's no question about that. There it is. Okay, 26. Okay, on the 26th, what do you have here? Fahey paid in full less the discount. Fahey was on the 20th. Yeah, so you're 6 days of the 15. So yeah, you're 6 days in, so you're good. So you're gonna 2% discount. Yeah, so we're gonna go through all that right now. Okay, you're on the 26th here, and you're payable, and you look for Fahey is 1,500, which is right there. Okay, and then looking at this now, yeah, Jeremy purchased from, so you don't know who bought from who. The supplier bought from a publisher, so they're paying that guy. Okay, so and they're going to be within the discount period also. So it's equal 2% times 1,500, and then here's your difference. What cash really comes out. So again, the Fahey will recognize all of these entries, but reversed from how we're looking at them with us, we recognize we paid down a liability, but we also recognize an inventory at $30 discount and cash 1,470 instead of the now. That might not seem like a big deal, but when you're a Walmart, you're buying acres of apples and oranges and bananas, from your suppliers. Add some zeros to this, it's significant. Okay, so these discounts are always helping. And believe me, Walmart, they have the muscle to get what they want. And so this is 26. Yeah, we have 3 more to go on this. So again, this shows, again, you want to manage who's selling to who's buying from who, and discounts, and are you within the discount period? Yeah, and again, we got to break this down a bit, and that's just sort of my doing here. Down, delete. Yeah. Every time you look over things again, you can always find a sort of a better way to fix everything, which is never bad. There it is. Okay. Yeah. I'm not overwriting my little check, because doing that computation, it might seem tedious, but making sure that these numbers add up to what they're supposed to be is important, right? And you want to recognize your payable. So again, you bought. This is Jeremy. This is the warehouse buying from publishers. Inventory 1,500. They had a liability of 1,500, and they paid. They came in within the credit period. They paid within however many days. This is 6 days from June 20th. So yeah, we're doing the math here on this here, 6 or 7. Depending, it's a full day. And again, you want, is it the end of that day? Does it include that day? It's got to be to that level of detail. I mean, it's just what it is. So, okay. So you have all that. All right. The 28th, sold books to Carlisle for 1,400. Again, this is just a repeat of what we've seen here. So actually, it's both of these. Okay. So you sold for 1,400, and it cost you $850 allegedly. Yeah. Factor report merchandise sold, what's the buyer? Yeah, there's on the 28th, and we have one more to go. And again, folks, in a half hour or so into this, this is it. Granted, it's a credit for some returns, I think it was, and then yeah. So this 30 is all linked into all the same thing here. For 30 here, you're going to open up all these. Okay. It says you're going to return. You granted them. Carlisle bought 1,400. They're returning 120, but it cost you 72. Okay, so in your inventory got bumped back up by 72 because that's what your cost was, and then they returned 120 of what they paid. So they wrote down their, or your receivable has been written down by 120 because they don't owe you that much because you gave a return allowance. And that's it. Journalized purchase and sales transaction under professional. That's there's nothing, right? There's nothing else. Okay, this is just a nice little workout on your journal skills. But journal skills when it came to a merchandising company as opposed to a service company, which most of our examples have been service companies. Okay, so like I said, so this is all good work for you for your accounting expertise. Okay. Next one will be obviously a little more complicated. We're looking at Boone Hardware, which is next, which is 5.2. I'll get them. We'll do all this on one video because we haven't been going too long so far today. And actually, what I want to do, just as we're here, I want to go to the online folks' sheet. We're going to copy this. This is their class notes. MPV 772. We'll just drop it in there. Okay. So these are the class notes, guys. This is rename merchandising operations, which is right there. Okay. There it is. This is for the online folks, merchandise. So you guys have it. Okay, so we'll post that to everybody's every specific sheets as we need to, specific Blackboard sites as we need to. All right, number 2, and yeah, let's go back to this. So we have all our transactions, journalized transactions. Yeah, that's it. That's all there was. It's journalized purchase and sale transactions under a perpetual system. Okay, so you saw what to do there. This, yeah, B is a little bit longer. Or number 2, rather, it says Boone Hardware, merchandise transactions in the month of April. The Boone showed cash effect. So yeah, now we gave you some of these entries, and with this one, you were given in number 1, you were given their initial inventory number, but you didn't use it because you never went to the ledger or trial balance or balance sheet or any of those kinds of things. So you didn't need it. But here you're going to need it because you're given initial cash balance, initial owner's capital. So when you have a beginning point, in terms of dollars, you want to obviously include that. You don't want to just, you're not doing closings here. You're doing, you're continuing the ledger. You want to know where you started. It's not always going to be 0. It's rarely going to be 0, actually, when you do this for real. So Boone Hardware completed the following merchandise transactions, and all of the May transactions are listed there. It says journalized post prepared and partial income statement. Yeah, and you're preparing a partial financial statement also from all of this. Okay, so you have all those things to deal with. Okay, so journal using partial system, and beginning cash balances. Okay, journal and income statement. So yeah, anytime it says post, that's a ledger. Okay, so just and some of the answers are sort of kicked in here a bit, for better or worse, but we'll work on that as we go through this. Okay, so here's number 2, and lists all the again. I should have taken some of the drama out of this. It'd be good if you sat down and you're able to create these folks. The book company, whatever, who's this, Wiley? Yeah, Wiley. They didn't send me these textbooks, or they didn't send me these files and say, oh, here's the file to go with the textbook. No one ever sent that to me. I worked it all myself, and I'm sort of taking a little bit of the work out of it for you by giving you the structure here with this. But it's important to it's important to be able to make these models from the beginning, and to see it in your head, and that's an important piece of the puzzle. So you have all the accounts here, and you got to organize yourselves. Okay, there's no job where you have to organize yourself. So yeah, I threw the definitions in here. Again, myself included, because I don't do merchandising, journalizing, every day. Delivery paid by the seller, freighting is paid by the buyer. It's a part of the inventory and all that kind of thing. Okay, so just having those definitions sort of handy is never bad, and who the seller is, who the buyer is. Again, in the mind's eye, you always want to keep those very clear. So we're dealing with a hardware store, and there's one by the school, I think, down on Duncan and West Side Avenue, that may be called Duncan Hardware, I think. So just always think of that guy. You certainly always think of the Home Depot too. So purchase merchandise on account from, so this is, Home Depot or Lowe's, they're buying from their sources, okay, and whatever merchandise that they're buying for $4,200, and they sold it, and what the cost of the merchandise was. And again, we're going to go through all the transactions here, and we're going to get down to the journal here. But what's going to be different here is that we're also going to have ledger down here. This is going to be tougher to move if we have to do some of those moves, for the checks and things of that nature. I don't know if there's too many of those we have to do here. I don't think that there may be one here, but move, because anytime you have something centered, all these things are centered, it's tougher to move. See just this balance. There's some, and actually what we could do, what we should do, is just bump past the journal for a second here, and just take the beginning balances just so we don't forget them. Yeah, cash 5,000, owner's capital 5,000. Okay. So drop on 5,000 in there, and there's 5,000 right there. Okay. And this is another 5,000 right there, equals 5,000. So there's no chance that we're going to forget or miss it or anything like that. Okay, that's ledger. This is all ledger, and then we're going to quickly, work on the partial multi-step income statement. That's it. So we're doing ledgers here too, just to remind everybody, how to deal with ledgers. So the first transaction. Let's look at the first transaction. I have everything reconstituted in the Excel, so it's all here from the tax. So purchase merchandise on account 4,200. We can even look right here too. 4,200. Okay, 4,200. Oh, save it as you go. Okay, that was so. Yeah, you increase your inventory, and you have a liability now, 4,200. That's it. Okay, that's what you have with that. And just check that as we go along. 42, 42. Okay. Next, sold merchandise for 21, and the cost was 1,300. So this is one of those where you're using a couple. Okay, if the cost of the merchandise, cost of goods sold, 1,300. Your inventory, the people who sold it to you, or I'm saying you're selling it. It's Boone Hardware, yeah. So Boone Hardware's inventory gets written down by 1,300, but they sold it to the public for 21. Folks, you got to pay people. There's property tax. There's all sorts of expenses. That's why it works. This stuff works how it works. That's why there's a bump up, because there's a cost of delivering it to you. If you had to go out into the woods and cut down a tree and make plywood, I think that would take a substantial part of your day to do, or a couple days, right, to do all that or more. Okay, drive out to Seattle somewhere. Wouldn't have been, wouldn't have been so good. But Home Depot, $4 or whatever it is. You go in there, you put the cash down. There's your plywood. Okay, not a bad deal. Not a bad deal at all. On the 5th, something was returned. Again, this is, so Boom purchased from their supplier, and on the 5th they returned merchandise that was worth 300. Okay, so this is here. Okay, this is from here. So from that 42, their payable gets written down by 300. And this is 300. And then you see. But so on the 5th, that's what happened with that. So there's some write-downs. And again, we have a little note that explains it. Some defective goods were purchased and then returned from Boone source. Okay. On the 9th, received collection full. So so there was a sale made on the 2nd. On the 9th, which is 7 days later, okay, that $2,100 bill was paid, and we're going to include discounts. And if you look at the 9th here, I made a little notation: 7 days later, including the full days. Because what is it's 3rd, 4th, 5th, 6th, 7th, 8th, 9th is 7, and then 7, 8. Again, it depends if you count that initial day as a full day or at the end of that day. So you need to clarify that in wherever you're working, how that's counted, and know that. So okay, so this is 21. They didn't return anything, or credit sale to buyer per invoice. So here's this inventory payable, okay, and the 9th was collections and less full from May 2nd. So merchandise. So merchandise was sold on account here. The 5th and the 1st are linked. Okay, but the 2nd and the 9th are also linked. So merchandise was sold. So you're getting the money's coming into you, and there's also something else happening here. So this receivable right away is this. That's that receivable, which is right there. And then you say equals the percentage here, 21, and this is simply minus that. Right? It's receivable minus the discount, which is 2,079, and equals sum, which is in there. Okay. Receipt of cash from the buyer for accounts receivable. Okay, you save that as you go. There's a lot of these to go. So okay. So there's, again, you receipt of cash. Okay, fine. All right, the 10th, paid your source. You purchased, all right. It's on the 10th. From the 1st, that situation. So you're purchasing there, and on the 10th, it's 9 days. Let's see what the terms were for this. 9 days. Okay, you're 9 days in, so you're falling under the discount period. Okay. So for the 10th, you're writing, your payable. You're writing your payable down from the 1st. And actually, what you're doing is, you're taking this, because you made some returns. It was 42 minus 300, right? It's 39, right? If you look at this, and if you're using the payable entries, you initially bought 4,200 from your source. You returned 300, and that's how you have 39, which is right there. And what you're doing next is you're going to write your inventory down because of the discount, because you're falling within the discount period. Okay, and then this is simply your difference. 38.22, and you do your check equals 3,900. Okay, save all that. Save as you go. Okay, that was on the 10th. On the 11th, purchase price for cash. These are just supplies. It was just a cash transaction. That's all that was. Okay, we always like the easy ones. Another supplier transaction. Purchase merchandise for cash now. Again, these weren't credit. So on the 12th, this was another, so 1,400. 1,400. Which is right there. Okay, so that was on the 12th. Received a refund from supplier on cash. Yeah, so one of these folks, when you purchase merchandise, so it says supplier, but yeah, so for the 15th, yeah, this is from 512 is what this is. It's not the supplies. This is from 512 is what this is. So you're going to come down here and you're going to say, okay, you received a return 150 back in cash in your inventory. So your inventory got written down and you got the money back is what you did on the 15th. Okay. Purchase inventory account for, yeah, so this next one here on the 17th, purchase merchandise from a seller, 1,300. And again, you're given all the, and this is shipping point now, not destination. Shipping point means you're going to pay for this. So if you look at this, you look at what's going on here. So for the 17th, you're going to have 1,300, and then you have the freight costs also. 2 days later, you paid the freight on the purchase for 130. Right, so these are linked, these two, right, because it's shipping point, which means the buyer is paying, like which us, which means if we're Boone Hardware, right, we're paying for this. Okay, so the 17th, you have a $1,300 transaction, 1,300, and again, folks, it helps you paint the picture. It's what's happening. Okay, that's all good. And then 2 days later, you paid the FedEx guys, right? Freight on goods purchased from your source. Yeah, paid by the buyer, and it's recognized in inventory that it's a part of what you paid for. So it's like you bought 1,430 worth of goods, type of a thing. Okay, like I said, we still have a bunch to go here. Again, save. On the 24th, you sold merchandise for $3,200, and the cost for cash, and the cost to you was $2,000. So 24, there was two on 24. Oops. Yeah, sorry about that. Okay, so here, committing a control accident. So shift. Oh, so for 24th, it was 3,200, 3,200, 2,000, 2,000. Okay. Cash to the buyer. There's a cash sale. But you like those, right? You like a cash sale. Okay. So 32, 32, and 2,000. Okay. On the 20th, there's 4 more transactions to go. On the 5th, you purchased, you purchased from a seller. I don't know why. I didn't write this down. So this. Okay. Again, you got. I'm going to fix it here too. I apologize for a little bit of inconsistency there. There you go. Oh, that seller destination. So yeah, when it's destination, it's paid by the seller. So that number is not going to show up on your books, but you purchased merchandise, and there's your credit terms, 2% 10 days on the 25th. And it was 620. Yeah, 620. Okay, it was right there. Enter an account from seller. Fine. All right, summer handler. Okay, 620. You paid Agbahi distributors less a discount, and that was on the 17th. All that happened on the 17th. Yeah, I don't know why. Yeah, these all needed to be underlined. I don't know whether or not. Okay, so there's your distributor. And this transaction happened on the 17th, 27. I guess we're within the 10 days, less the discount. Okay, so 1,300, 2%. Okay, so let's get those numbers. Yeah, so this, again, it's always important to reference the one that it's coming from. There's accounts payable, 13. Equals this times 1,300 equals this. Okay, 1,240. So this was the 2% of the 1,300, was $26. There's the difference, and you paid the Boone Hardware paid that, and this is the check here. I will get rid of all the gray in a second. Okay, there it is, and then save. There you go. All right, so you had a payable that you wrote down. If you debit a payable, it's like you're debiting it, so you're writing it down, and you're taking your discount. And when you have a discount, you write your own, because your inventory is kept track of in cash. You write that down, and then you only paid 1,274, which is the difference between the initial price and then you get your discount. Okay. I made refund to customers for defective merchandise. Yeah, so there's somewhere along the of your sales, and it doesn't specify which one, but you returned, you accepted 70, and then the fair value was 30 of something that you sold, type of thing. It could have been here, it could have been in a couple different places. Okay, but it looks like it could have been to match it to something. You always want to match these. Okay, so maybe so it's cash, so it had to be one of the cash transactions. So it could have been from the 24th. All right, so you match it to something. You got to match it there. So 70 and 30. All right, and it's a sales allowance here. 70, 70, 30, 30. Okay, there you go. I got two more to go, and that's it. They're both on the 31st. So yeah, that's most likely, it says cash, so for cash grants customer. So yeah, so it had to be from one of your cash transactions. And the last journal entry, sold merchandise on account for 1,000, and the cost was 560 for the merchandise. So the merchandise cost of goods sold, 560, 560, and then, okay, work credit sales and customer per invoice. Save. There's your journal. So the last journal, this series that we're dealing with here. It's a lot, right? You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 19, 20, whatever. 19 entries. Okay, so like I said, I warned you in class that these were going to be long. Okay, and now what you need to do, and actually, we could have made everything from here. I don't know why we didn't. Well, we could have done a balance sheet. So I don't know if I'm going to do that on this video, but I could sort of go back into this and, we could sort of recreate some of this. I'm not going to just wing that in here, but, obviously you could create a fairly sophisticated balance sheet from all these entries. But you're doing a ledger, because then you have to do trial balance, and like I said, you could take all these to the next level, very easily. Okay, so now we want to figure out all the cash that came in, the cash that came out, all those pieces as you go along. And actually, we're gonna make everything. We're gonna take the journal entries and we're gonna just start with those. Inventory is pretty long. Okay, inventory is pretty long. Payables is pretty long. So you're gonna work it like that. Okay, so we're gonna go down to inventory first. 42. Okay, that's 42. And then the payable, I think it was. This was Q121 was your payable. Those were your payments. Right, those are all your 4,200. So you took care of that from inventory and payable, and there'd be a lot of those. Receivables, P125. $100, and your balance. All right, change the font, change the. So this is, again, you make your entries. It just, balance just equals your debit or credit, and this just refers to, where the number came from. And there's your receivable. Okay, that's where the number came from. Okay. Q126. Same thing, all Q. And like I said, we're not going to reference all these, but like this, but there it is. That's where everything came from, all Q. Those arrows, if you go to formulas, trace precedent, the formula auditing, that's where those are in there, okay? So formulas, formula auditing, precedence appendix, remove the arrows, okay? You have all that as you're going through all this. Actually, what we could do is to keep, because there's a lot of entries here, and it's easy to get, I have the answers here, but what you should do is, you should cover these a little bit with just a little bit of a shading, and as you knock them out, you can get rid of the shading, because it's so easy to, because you're going to go blind. We did 4 numbers already, but you go blind with these, and you make a mistake, and that kind of thing. Especially, sure, this is academic, and we have answers. Do this for real. This can get very large. All this, and certainly it's not entered by hand, and that's why the whole AI thing, you're hearing out there. It's stuff that if you went to engineering school 10 years ago, 20 years ago, 30 years ago, you were familiar with artificial intelligence and where it was all going. So I'm not surprised to hear that, everything's getting more automated, because the logic of the programming is making it such. But, I'm not shocked by that. I'm not surprised by that. I taught on the computer science faculty for a number of years at Rutgers. And the math department in Newark, the Rutgers math department in Newark and the computer science department were all the same department. Statistics, it was all in one thing. If you go to Piscataway, those are three separate departments because they're all so big, and the math department is huge down in Piscataway. You know, it's coming. Again, you got to be ready. Okay, there's no two ways about it. Cost of goods sold. Right, there's cost of goods sold, 13. And finally, it's other half. This was Q130 inventory. Equals this minus this, all HHN. So yeah, so what happened was this first entry equals boom. This one was the balance subtracted from this, the credit, the balance minus the credit. So it's 29. That should be 29. Okay, and like I said, you want to just make sure, like I said, we're fortunate we sort of have the entries there, but you can see how many entries are under inventory. There's a lot of inventory entries. Okay, to the 13, and then cost of goods sold, I think we did already 1,300. Yeah, okay. Yep, 13. We didn't use freight out. I had that sort of floating around, but I copy and paste a lot. I don't recreate these every single time. I copy and paste them from something I worked on, so it just sort of followed us a bit. That's not a big deal. Okay, payable is next. This is P133. Okay, so this is equal to this thing minus the 300. Okay, payables, which is right there. And inventory Q134. Subtract it from that. Yeah, 300 to 2600 up to the fifth. Yeah. Okay. So there's your 300 for inventory, 300 for payables. Then you can keep knocking these out. It's going to test your stamina. Okay, there's no question about it. Now you have a cash number here. All right, 2079. I get to add that in. Okay, you did that. And now there's a couple pieces to this. There's the cash number, there's the discount. P139 is your sales discount. Let's just make sure. Yeah, 21. And the balance, this is just equal to that balance. Alt HHN, Alt HFC. I mean, whatever if you're in the Apple world, whatever your shortcuts are to make it black font and to get rid of the fill, those kinds of things. There's your 21, which is right there. And receivables, Q140 credit. And zero is as valid of an entry as you go along as anything. So don't be thrown if it's a zero. That's okay. No problem. Okay, with that. Zero's a number. I say that in class all the time. Zero's a number. You can save as you go. Like I said, folks, it's stamina, right? Making these ledgers. Your account payable, your debit is next, is P143. Even though it's the same number, gets added to it. It's 39. this is that comes out of cash. Q144. And then you have it comes out of there. Okay, we have that. And then inventory, the next one, Q145, credit inventory. And it subtracts out from it. Okay, you have that. Again, let's just make sure you're two on the 10th, 2522, yeah, 2522, 300. Yeah, to make sure, because these, like I said, you get very, you know, the focus you need for this stuff is it's intense. There's no, you know, there's no other way to say that. You need intense focus to all this stuff. And count payable 3900, P143. Oh, you have that already. Yeah, there's your 39 right there that you had. Yeah, we have everything there. And this thing, all TT. Inventory 78. Yeah. Yeah. All taken care of. Okay. Save as you go. But yeah, okay. So supplies 400, P149. Not just supplies. And then it comes out of cash, Q150. $28. Yeah. That's the 11th is right there. Okay. Took care of your cash supplies. Again, you purchase some inventory here. Cash is 14. Oops, equals this minus 1400. And then inventory P153. This gets added to that. Okay. Yep, 39 on the 12th, 22. Okay, so see how this is going? Cash comes in, P157. Add it in. And this is inventory Q158. Yep. Okay, so we're good. On the 15th. P161. And this is Q162. Okay, 6,500. Payable, 6,500. 39, 1,300. So what happened here? Oops, a little bit of a mistake here. Okay, this was this, subtracted. This was a subtraction. This was an addition. There it is. Yeah, so you got to watch your math in that. When you have a liability, you got to be careful. This is your beginning balance. The debits are subtracted. Debits are subtracted. Credits are added. Because normal balance is a credit for liability. Okay, so you always go back to your initial rules, a lot of the time. Okay, so it's on the 17th. Okay, we cleared that up. Cash, Q166 came out of cash. Came out of that. All right, they're right there, the 19th. P165. Yeah, 5202. We did all that. 19. Inventory, 19,130. Yeah, okay. We did all those. P169, cash came in. Like I said, folks, your stamina is going to really get tested with this as you go along. So, okay, 3,200. And this was Q170 revenue. On the 24th, cost of goods sold, P173. Q174. Inventory equals Q174. Yeah. So on the 24th, you're 32. Yeah. Okay. So we did all that. This is the 25th. This inventory 620. Payable Q178. And this is this plus that. Although save. on the 25th. This is 182. Okay, this is all that. And the cash numbers here. Amount of cash. Okay, look at that one, and then inventory Q184. Okay, almost done. That was on the 27th. Like I said, the ledger, which this is why these things are automated. We're teaching you, if and when you take the CPA exam, that you're very schooled in this. Okay, but certainly doing it like how I'm doing it here, maybe a long time ago it was done like this, but this is a long, tedious project. I'm good with doing things like this. I'm sort of wired for it, and I'll tell you, folks, a big part of success is knowing what you're wired to do. That's a big part of it. Yeah, you got to know what you're good at, that kind of a thing. P188, sales returns and allowances. You got to know what you're what you're for, kind of a thing, and that's very important. That's the main thing we're trying to teach at St. Peter's, or at least certainly with me, anywhere that I've taught, is to help people get to know themselves. Because when you're sort of challenged, that's when you learn what you're made of, and which way you're going to go with a lot of things. That's important. 192. And you're sort of lucky with these templates where it's sort of based on the right answer, kind of a thing. So it's as long as it needs to be, and all those other kinds of things. So that's certainly something to keep in mind. Q193. Everything's as long as it needs to be, and all that's the right entries. But like I said, imagine, which is, again, I'm not saying that you should be in a position to create these things from scratch, but I'd always hope that when I started doing this in Excel, that people could sort of create these things. I know it's tough, and hey, I'm in the job that I'm in because I can create these things. So maybe that's the big secret with it. But certainly, you want to think like that at some point. If I had to make this, where would I start? And what would I do? Those kinds of things. And your receivables, your sales number, Q187. And you can see everything just sort of falls into place here. And again, knowing what to add up, knowing what to add up or not, type of thing. You got to be careful with the keyboard shortcuts. You don't want to get someplace where you're off the reservation, so to speak. We almost did that there just now, but okay. So 63 for sales revenue. This is 531. Yeah, 531. Inventory Q201. See if our inventory balance. But yeah, so we're good. 400 for supplies, good. Cash, $333, $3,333. Okay. 1,000 for receivables. Payables 620. Yeah, we're pretty good. Make sure we finished everything here. Cost of goods sold and inventory 531. Yeah, we got one more cost of goods sold to deal with. Okay. There it is. 3830, 2170, 63, 5,000, 620, 400. Yeah, we got everything. 3266, 1,000. Yeah. Okay. All right, that's it. Okay, so now we're just going to very quickly create a partial financial statement here. I don't, who knows? Yeah, I didn't sit down to balance sheets, and all that, but looking at this, anytime you have the ledger for cash, you can create, you can create a cash flow statement, from this. But looking at all these though, all the cash returns, allowances, it looks like the cash would have been all from operations anyway. It looks like. Would you count inventory investment? Yeah, I don't know. We made those cash flow statements without worrying about the inventory numbers. I think that's considered operations also. So it would really just be the operations number, and you would just get the same. There's no expenses in here. There's very little expenses in here. Sales right here. Let's go through from the beginning with the journal entries here. Every cash receipt, where would it fall? This would be operations. This would be operations. This would be operations. This would be operations. Operations again. Cash from operations. It would be all revenues, operations. There's no investing. Yeah, operations, operations. Yeah, it'd all be operations. So you don't have a partial with that also. So like I said, I'm just going to leave this as the book sort of has it. But just know that you can always do more with a lot of these, and always just keep that in mind. Sales revenue 6,300. Returns and allowances 70. Discounts 21. 91 equals sum parenthesis. Comma. Yes, and here let's highlight all these where this all came from. This was the ledger balance for sales. That's what that is. These were returns. These were discounts. Right. This is just sort of lowering the sales revenue a bit to 6290. Cost of goods sold here was 3830, and actually this needs to be a negative. So I'll throw a negative sign in there. And the gross profit is just simply the sum of net sales and cost of goods sold. There you go. An hour later, I suppose, all this, but there's your calculation of gross profit. And let's look at the tax book, 2379. Yeah, 2379. There it is, right in the tax book right there. So prepared income statement partial to gross profit, ledger, journal. Yeah, so we took care of everything. So there you go, folks. Like I said, you have a little bit more time for the live class. You have a little more time, and for the online guys, start reading this chapter. But that's it. I sent an email to the online group this morning, and you can, you can start reading the merchandising chapter. So for the online, it's the net present value, which is the long finance chapter. We have the completing the accounting cycle assignment. Start reading the cash chapter, which is chapter 8 in the accounting book, and chapter 5, which is the merchandising operations chapter in the accounting textbook. Okay, and that's for the online guys. We have a whole month or a little more to go in that course. So please, don't get backed up with these assignments. I didn't get that many from the online section, so please, try to get those handed into me. Don't constantly be behind, with everything. Okay, so there you go. Okay, we did a lot of work on this today, and just as we're sitting here, let's just, and see in here, it's good that you've seen me do this too. How to copy and paste, a big 300-line model into, another location here, sort of like this. Yeah. Okay. There, and we'll obviously make these a bit bigger. Right, that's how you increase the width a bit to make sure you're okay with this. Okay, so there you go. So for the online guys, there's your examples. It's under the tab merchandising operations. For the live for the live classes, just go to video. That's 252 401. There's your video examples here. So you just click into that. And there's some other stuff here that the value in the stocks, whatever. We didn't really work too much on that. And here, this is too much space to delete some of this. Okay. Yeah, we had more equipment. We had a couple. So we got a few models sort of floating around here that we created, video for everybody to sort of work on this. But and mind your printouts. Make sure your printouts are done well. That kind of a thing. Okay, so there you go. So the online section, the live section, everybody has a little bit of this merchandising operation models to look at. And like I said, it does nothing but help you to work like this. Okay, and like I said, get an Excel, read the chapters, all those types of things. Okay, let's make sure we save everything. So the template's got to go up. And this is mine, which is right there. And let's get to the class guys. Yeah, so this is the online section. Okay, so you guys are all set. And like I said, we're gonna hand this out, and we're gonna hand an assignment for you guys, relatively soon. Start working on this. Okay, but there you go. Okay, folks. Again, as always, I'm always happy to spend a Sunday morning making these videos and talking to you guys. Yankee game is on, about an hour so far. We'll see how they did. I'll get to that after we're done here. But again, it's always good talking to you. Enjoy the weather this weekend. We have about 4 weeks to go before the end of the semester, so then the exams kick in, and there'll be a lot of YouTube video. And like I said, for the online guys, for the live class rather, I'm sorry, for the live class, the end of April, there's a couple days where we're going to use YouTube for the classes. So get used to these videos. Okay. All right. We'll see you. Take care. Work hard. Read the textbook. Watch the videos. Do the Excel.